Yesterday in the UTP lesson, we started by talking about the ABCDs. We discussed how to be able to plot ABCDs appropriately. We discussed how to be able to track the King's Crown reversal. What we're going to do now is we're going to kick up the difficulty a little bit. All right, for those of you that were with me yesterday, you should have a relatively decent grasp on the ABCDs. If you did not attend yesterday, that's okay. Please be sure to let me know if whatever we're discussing does not make sense. I'm going to be sharing a very important document with you all, which I shared yesterday in the handout section. It's the ABCD rules, right? And this is going to be the reference document that we're going to be using. You can download it either from the handout section that's available in your control panel. If anybody doesn't know where that is, please let me know. Or you can simply screenshot this window that you're looking at right now by using the screen capture option on the top right of your video window. Okay? So I'm going to leave this up here for another few seconds while I respond to Mr. Chris Guzman, who has just messaged me. Okay, so everyone should have had enough time to be able to capture this or download. Let's go ahead, let's get started. Yesterday, during our discussion, again, as I mentioned, we were talking about how to plot ABCDs. We talked about how to monitor reversals. And we generally understand how ABCDs develop. We understand that when we're observing trend behavior, be it in an uptrend or a downtrend, the market starts, let's say in an uptrend from a low price, goes up to a high, moves down from the B to the C, retraces, and then extends finally from the C to the D, right? So this is the A, B, C, D wave of an uptrend, and on a downtrend, we've got the opposite, right? The market starts at a high, goes to a low from A to B, and then retraces from B to C, somewhere inside the AB boundary, and then extends toward a lower low. And that would be an A, B, C, D wave in a downtrend. Everybody clear on that? Anybody feel uncertain about this? Okay, so while this is true that the market does indeed move this way in these ABCD waves, there is also the fact that the market doesn't necessarily move in straight lines, right? So what many of you have noticed is that sometimes the market does this, creates an AB, and then as we talked about yesterday in some of the crown pitfalls, right, the market retraces to give us a C, extends, doesn't necessarily fulfill the D extension, and then does things like this, right? How many traders remember seeing things like this at some point in time on their charts? If this is my AB boundary, would I be able to say that my AB boundary has been taken out and it's time to reverse? Or what has just happened here? Have there been any changes on this AB boundary? Deb says, yeah, I've seen it too much. Oh yeah, right? This is the market, right? We can all agree initially with the AB boundary first formed, we had our C right here. And as time continued, right, the market continued to give us nearer points to the A after the B, so we changed our C, and then it gave us a closer point to the A after the B, so we changed our C, right? And every time the market came down deeper and deeper, we took a look at the Fibonacci again to reference, and based on the position of the Fibonacci, we were able to identify the projected D extension. Everybody agree with this? What I'm going to teach you right now is the ability to be able to keep track of this, of the retracement, right? When we talked about the ABCDs yesterday, let's go back a little bit here. We talked about the ABCDs yesterday. We talked about the market going from A to B, B to C, and you know what? I don't really remember if I mentioned this, so let's go ahead and let's verify right now. Did we talk about the 80-20 rule? Did we have the opportunity to talk about the 80-20 rule? Okay. Just in case, whenever the market gives you a shallow or a super shallow C retracement, Benu says, yes, he's well aware of the 80-20 rule. And Deb says, I don't remember. You talked so much. Very true. It's kind of the nature of the job. Okay, 80-20 rule. All right, 80-20 rule states the following. Whenever the market gives you a retracement and touches the 382 or any level before the 382, so by that the 236, right? Anywhere, if you get a bounce anywhere in here, that is considered either a shallow or a super shallow C retracement. So if the market touches anything before the 382 and gives you a bounce, we're looking at a super shallow C retracement. If it actually touches the 382, now we've got ourselves a shallow C retracement. And anything beyond the 5-0 is considered a deep C. Everybody aware of these distinctions? Anything here is considered super shallow until it touches the actual 382. If it touches the actual 382 price point, now we're dealing with a shallow retracement. If it touches the 5-0 or beyond that, we're talking about a deep C. Now, deep C's, once the market hits a deep C level, the market has a higher propensity of heading in the direction of the trend. Right? Once the market has hit a deep C and you get a bounce, you've got a higher propensity of it heading in the direction of the trend. That's why in the Ultimate Charting software, if you notice your shading of your automated Fibonacci's in an uptrend will go green. The 5-0 and below is green because that's where we want to start looking ideally for our entries in the direction of the trend. If it's in the yellow area, it's less than the 5-0, so we're dealing with a 382 situation or a 236 situation where we have the 80-20 rule in play. What the 80-20 rule stipulates is that 80% of the time, whenever you get an AB boundary, what the market actually wants to do is to give you a deep C. The market wants to make its way to the 5-0 or deeper, right? But, so you can expect most of the time that it's going to do that. You can expect most of the time that the market is going to do that, even if you were to get a bounce here, shallow or super shallow. If the market manages to bounce in this shallow or super shallow area, more than likely what it's going to do is it's going to come up here, head toward the 1.618D extension, but it's going to encounter some sort of resistance by either the 1.18 or the 1.27 in an uptrend and return back into the AB boundary on its way to give you a deeper C. 80% of the time, this is what the market's going to do. It's going to try to give you a deeper C. All right? So 80% of the time the market wants to give you a deep C, you can expect that that's what's going to take place most of the time. 20% of the time, though, the market, if you were to get a super shallow or a shallow retracement, 20% of the time, expect that the market is going to go fast and aggressively toward the 1.618. For these reasons, the FX chief would prefer that we look for opportunities once the market has hit a deep C. Right? So you're going to have to make a decision as far as what kind of trading you're comfortable with. If you don't want to miss a single opportunity, then you may consider entering in with the super shallow or the shallow C retracements, and more than likely you're looking at a tighter trade, right? Putting your stop loss below the 382, like we learned in the Ultimate Traders package, or a candlestick type trade if you're looking at something like that. Once you get into the deep C area, we're in a much more comfortable position where we place our stop loss below the A. We're closer to the A, which means less risk. And we've got a longer way toward the D extension, which means more profit. Make sense? Any questions on this? That is the 80-20 rule. Most of the time, the market's going to want to give you a deeper C retracement. So if the 80-20 rule is true, then that means that even at times when the market makes a aggressive push toward the 1.618D extension, if it doesn't do it really aggressively, you're more than likely going to notice it slow down somewhere around the 1.18, 1.27. And then the market's going to make its way, more than likely, to try to give you a deeper C. And we've already established that most of the time the market's going to try to give you a deeper C. We've already established that wherever the market goes, what it tends to do is go in waves. So what we're going to be doing tonight here is I'm going to try to teach you the slightly more difficult method of being able to track a sub ABCD retracement. Because if the market's going to move in waves and it's going to try to give us a deeper C, I can potentially track these waves just like I track capital ABCDs, and I can even potentially trade them given the opportunity. What do I need to be able to draw an ABCD? What do I need to be able to draw an ABCD according to the ABCD rules? Or according to what you know, according to what you remember? What do you need to be able to draw an ABCD? A high and a low, perfect. So I need a high and a low to be able to do that. If the market starts to do this, more than likely it's going to provide you with exactly that information. So what we're actually going to do is we can monitor, track the waves, small AB, sub ABCDs on the way down. And what you'll notice is that as your ABCDs get fulfilled in the opposite direction of the trend, the sub ABCDs, you'll notice that it is also at convergence with a deeper C. Right? I'm speaking in very, very spatial terms right now. So here's what I mean. Here's an AB boundary. Here's my swing from A to B, and then we've got the market doing this, extends to a higher point, doesn't fulfill the D extension, pulls back down, and does this. How many traders have seen something like this happen? Yeah, I'm sure at some point you've seen something like this. If we take a look at this nice and simply, would you, actually let's do this. Let's do a time-lapse situation. If this is my AB boundary, where's my C retracement? Here's my A, this is my B, this is my C. Everybody agree with that? Right? So it's possible, right, that I could have gotten in right here and bought the market. But let's just keep this nice and simple. As time progressed, the market went ahead and now has pulled back to a deeper area nearer to the A after the B, right? Which means this is my C. And every time I have a change in my C, I'm taking a look at the retracement level in relation to the Fibonacci so that I can project the D extension, right? Then the market started to extend in the direction of the trend, making higher highs, found resistance, and started to come back down again. Now, once again, I've got a change here. Right? Deeper C. Has the C gone deep enough to merit a change with respect to my D extension? Nope. So my overall target remains the 1.618. If and when the market were to do something like this, once again, I've got a deeper point. The market's touched the 8.6. So now the expected D extension is this. Was everyone able to keep track of that, spatially speaking? Okay. What I want you to do now is I'm going to have you switch gears, because we've been looking at overall, we know that this is a capital AB boundary, right? This is the A, this is the B. And so here's what I'm going to do. I'm going to have you think critically, think spatially now. Let's go back to the origin. Here's the, sorry about that. Here's the AB boundary. And here's my first, the nearest point to the A after the B. Now, in this case, we'll say that the B naturally is a high, 2 to the left, 2 to the right, and then the market provides me with a low here, 2 to the left, 2 to the right. As of right now, what is the current C retracement depth? It's a 382, right? Hasn't touched the 5.0. Right, here's my 5.0. Hasn't touched the 5.0, so we're dealing with a 382. What do we know about 382s and less than 382s? The 80-20 rule, right? As long as you've got a 382 or less than a 382, you've got the 80-20 rule, which means more than likely the market's going to do what? Retrace toward a deeper point. It's going to try to make its way down lower. So if I know that, what I can do at this point is, if the market's getting ready to move down to a deeper C, I can potentially keep track of that. And the way that I'm going to do that is with a sub ABCD retracement. I'm going to draw a Fibonacci following the ABCD rules. I already have my capital ABCD in the direction of the overall trend. Right? I've got a capital ABCD in the direction of the overall trend. And if I'm going to track a retracement, that means that I'm tracking an ABCD in which direction, up or down? Down, right? We're looking at the retracement, which means the movement is going to be in the direction of the bears. Traders find drawing sub-ABCDs spatially challenging. And the reason why they find it spatially challenging is because they are not comfortable with the ABCD rules. Just like we discussed yesterday, if at any point you become disoriented, simply reference your ABCD rules. So if I'm going to plot an ABCD rule, an ABCD, and I'm following the rules in the direction of the bears, where do I begin? I'm going to begin at the highest visible point, right? According to the ABCD rules, to plot ABCDs in a downtrend, which is effectively what I'm looking at, the market's going to have to trend downward to retrace within that AB boundary. I'm going to begin at the highest high, and I'm going to go down to the first low. If I go back down to my chart, here's my highest high, here's my first low. This will be my first sub-AB boundary. Let's label this sub-A, sub-B. And so what I'm going to be looking for is, for this market, I'm going to expect that this market's going to pull back to give me some sort of sub-C, and when the sub-C is given, I don't necessarily have to trade this, but based on the sub-C retracement depth, it's just like any Fibonacci, right? We're just going to focus on the sub-AB boundary. Just like any other Fibonacci, based on its retracement, I can project the depth. So based on the sub-C, what kind of retracement do I have here? I'm looking at this down sub-AB boundary. What kind of retracement do I have here? .382, almost a 5.0. So the expectation is then, based on this retracement, that the market will extend to the 1.618. And if the 1.618 is going to be the D extension, then I'm going to be looking at convergence, more or less, with the capital 618 retracement. Right? This is just a drawing. But I'm looking at alignment of a D extension and a retracement. So I'm going to be expecting the market to go to this area. What you'll notice is that as A, B, C, Ds get fulfilled, you're going to have convergence with your capital C. Right? For the sake of this drawing, I'm going to correct this here really quickly so that everyone can understand what I mean. What you'll notice is that as your sub A, B, C, Ds get fulfilled, sub A, B, C, D, as your sub A, B, C, Ds get fulfilled, you will have convergence with your capital C. Does that make sense? If the market is going to retrace to a deeper point, exactly, Deb, it's going to be the same. The rules are the exact same, no matter what kind of ABCDs you're plotting. The rules are going to be the exact same. If this market is going to retrace deeper, then I can say, or if I believe the market's going to retrace deeper, I can simply, will we say that this is an A, B, C, D being fulfilled? What happens when A, B, C, D gets fulfilled? Perfect, Anthony, absolutely. C becomes A, D becomes B, right? Just like the rules stipulate. So if that's the case, I can draw another sub AB boundary. And what can I gather from this sub ABCD? Right? As the market, this is now my sub A. This down here is both my capital C with respect to the capital AB boundary, but it's my sub B. Right? So based on, if this is my current market right here, would everybody agree this is my sub C? If you cannot spatially identify this, please let me know. If this becomes spatially confusing, please let me know. Okay. So based on this sub-C retracement, if this market's going to fulfill this D extension, right now I'm looking at a 618. If this is going to fulfill, the target is going to be the 1.618. I am effectively projecting a reversal. Right? Because if this is going to fulfill and go to this D extension, it's going to have to take out the capital A. So I'm actually projecting a reversal here. If this were to fulfill, here's something that's going to really blow your mind. If this were to fulfill, right, and the market dipped down here, right, please ignore this for now, right? If this were to fulfill and the market comes all the way down here like this, right, Would you believe me if I told you that the sub-ABCDs would just become capitals? The reason why I say that is because when an AB boundary gets taken out, we reverse the Fibonacci's and we start to plot in the opposite direction, right? So if that's the case and the capital AB boundary has just been taken out, I would have to start to plot my ABCDs in the direction of the bears. And if I'm going to start to plot my ABCDs in the direction of the bears, wouldn't I have to start at the highest high to the first low, which would give me A, B, C, D, and then C becomes A, D becomes B? That's exactly, Deb, that's exactly what you're looking at. That is exactly what you're looking at. This can effectively give you the ability to participate in the reversal even before the crown. Right? It can give you that ability. I usually don't go that far, right, to trying to pre-project a crown. Instead, what I'm using this is just simply to just kind of get a leg up on the smaller swings. But here's what happens. If this then gets taken out, like it did right here in this example, right? The market exceeded the sub A, took out the sub A. I'm not going to reverse this. All right? I'm not going to draw sub ABCDs in the same direction as the capital ABCD. Because if that's the case, then the market's doing what it's supposed to be doing. It's heading in the general direction of the trend. And I'm not interested in having a bunch of tiny ABCDs within the capital ABCD. I'll just use the guidance of the capital ABCD and look to trade that. The purpose of the sub ABCD is just to kind of help orient me with respect to retracement movements or movements against the trend. Does that make sense? Right? So in this case, my current capital C remains the same. The market has started to move once again in the direction of the trend. If you want, you can get rid of the sub ABCDs since they're no longer serving any purpose. If the market were to once again make its way toward the D extension, but fails to fulfill the D extension and pulls back once again, I can once again start to plot sub ABCDs following the same rules, starting at the highest high to the first low. I've got a sub AB boundary, and based on the sub C retracement, follow the retracement there, the D extension gets fulfilled, C becomes A, D becomes B. And I'm merely tracking the retracement. I can, actually this should be down here. I can, if I felt so inclined, look to trade this. As this works its way down to a deeper C, I'm going to get more and more convergence. When you see these sub ABCDs get fulfilled, what you will find is that you're looking at convergence for your capital C. Right, as these continue, the market continues to go down lower and lower and lower, you're going to see convergence for your capital C. All right, everyone able to keep track of this on a spatial level? Okay. As a preliminary, as a buffer statement, if you will, I will say this. Is it absolutely necessary for you to plot the sub ABCDs on every currency pair and every time frame? Absolutely not. Right? It's not. When it comes to being aware of your sub ABCDs, it's not a requirement. I'll tell you the exact same thing that the FX chief told me when I started to study this and try to learn this methodology. If you can't get it, then don't worry about it. All right? The reason, I'll tell you what I've discovered through my teaching of this. If you don't initially get it, the problem stems with not being familiar enough with the ABCD rules, because the rules are the exact same, right? The rules are the exact same with capital ABCDs and the sub ABCDs. So if you're intimately familiar with the capital ABCD rules and what to do when the market does whatever it does, then you will find that you are at the same time already familiar with how to draw the sub ABCDs. They just occur within the constraints of the capital ABCD. All right? But it's okay. What you should be focusing on, what the chief told me, is our main focus should be the capital ABCDs. Our main focus should be the capital ABCDs because those are your major levels of support and resistance. Anything beyond that is realistically irrelevant. Just look to trade what you can handle for now. As you continue to gain experience and exposure to the charts, it will make more and more sense. To help you on the experience front, though, I'd like to open up the chat box for those of you that have a currency that you would like to give this a try on, and let's work on this together, shall we? The first currency request is from Benu. Benu, is there a time frame that you would like to work on? Benu is just lightning fast with the currency request. He says the 1 hour. All right, let's take a look at the 1 hour chart. Right, US dollar, JPY, and let's change this to a 1 hour chart. Okay, so first thing that we do always, compress the chart so that we can see the overall trend direction. Next, we're going to identify the highest high and the lowest low of the chart. So lowest low, highest high appears to be here. It's trend line. And we draw our Fibonacci's. Okay, so let's come in here. Oops, sorry, too far. All right, we're going to work our way to the current trend. So I'm going to start plotting my Fibonacci's in the direction of the trend. So I start at the lowest low, correct? Lowest low to the first high. They go the automated Fibonacci's being plotted for us in the direction of the trend. Market's making higher highs, higher lows, higher highs, higher lows, fulfilling ABCDs on the way up. Okay, if we should come across any reversals, we'll of course deal with them. Right, ABCDs in the direction of the bulls, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. Here's our trend line getting broken. Step 1 of the King's Crown. And then the market comes down here, goes sideways, very, very close to taking out the A. There, it takes out the capital A. Right? With the capital A being taken out, we have to reverse our Fibonacci's. So we reverse the Fibonacci's in the direction of the bears. Okay, this is a high right here. It'd be very difficult to click on that candle since it has little to no body. There we go. 118.66. And then we've got another high over here to the right. $118.61. So 66 definitely the higher of the two. We go ahead with start the Fibonacci's from that point in the direction of the bears. So we've got down ABCDs. You can see the down AB boundary being taken out. Another situation where I'd have to reverse, right? And it happens again. And it's going to have this one very sideways for some time. We're going to have two reversals at least to deal with here. So A gets taken out, we simply reverse. Actually. Okay, down AB boundary gets taken out right here. So once again, deal with the reversals as they come. Actually, there are a few examples that I can go through with you guys if you like, but I want to, at the very least, since we've got a limited amount of time, at the very least cover current. Okay, so here's the current AB boundary, right? Number one, let's just take a look at this from a capital AB boundary standpoint. We have our capital A, our capital B. What kind of retracement do we have? Where is the C retracement and what kind of retracement do we have? So far this market hasn't touched the 382, which is where our shallow criteria begins. So we're still inside this area between the B and the 382. This is the super shallow area. We've got ourselves a super shallow retracement. So the projected D extension target is indeed the 1.618, but the 80-20 rule is in play, isn't it? So since the 80-20 rule is in play, what can I do with this information? What can I expect the market's going to do? The market's getting ready. Yeah, Deb, it's a lot of information, which again, it's all having to do with the ABCDs, right? It's all part of the ABCD process. So again, if we focus just on the capital ABCDs and we just get used to the capital ABCDs, get used to the capital ABCDs, get used to the capital ABCDs, the more we remember the capital ABCDs, we'll find that we are at the same time proficient with the sub ABCDs. It's just a matter of being able to see the slightly smaller waves, right? But it's all the same rules. So if this is my current AB boundary, then the 80-20 rule stipulates that more than likely this market's going to want to come up toward a deeper C. So if this is going to try to go up to a deeper C, it's going to have to move up or down. Shane says, why isn't the capital B at one of the lows in the middle part of the AB boundary? Are you talking about over here? Okay, Shane, because that's not how the ABCDs work, right? Per the rules of the ABCD, and I've shared that document for you to reference it a little later on, but per the rules of the ABCD, if this is my trend, right? Let's say this is a downtrend. All right, we had the ABCD discussion yesterday. Per the rules of the ABCDs, where do we start plotting our ABCDs in a downtrend? Highest high, right? Perfect. So I go from the highest high to the first low. Here's my first Fibonacci, highest high to the first low. And then what I'm doing is I'm looking at the depth of the C retracement, how deeply the market retraces within that AB boundary to project a D target. Would everybody agree with that? So the reality of the situation is that as the market conditions evolve, I have no idea where the market's going to go. I don't know what the future of the trend is going to look like. So based on this information, the projected D extension is where? If this is the C retracement, this is the nearest point at this point in time to the capital A after the B. Based on this C retracement, I've got myself roughly a 5.0 retracement. So the projected D extension should be the 1.618. Yes or no? Perfect, Deb. Excellent. All right, 1.618. So here's the market. Comes down here and gives me a low. Now, the Fibonacci is telling me where my D extension is. In no uncertain terms, it's even giving me a price point. All right, this is the 1.618. That's the price. Did this market hit the D extension? All right, hasn't touched the D extension. So since the market has not satisfied the D extension, the Fibonacci is not satisfied. Right? If the Fibonacci is not satisfied, it's not done. We talked yesterday in the Fibonacci discussion that the AB boundary, the current AB boundary that you're working with, remember the AB boundary does not change unless C takes out the A or the D extension is fulfilled. So if we go back to that, and this is my AB boundary, did the market take out the A? Did the market fulfill the D extension? No to both, right? So the AB boundary doesn't change. When the market does satisfy one of those criteria, here it is. There's a D extension target being hit right here. And then it gives me a lower low. I have to wait for the low for the confirmation. Now C becomes A, D becomes B. What my AB boundary ends up looking like is this. The new AB boundary looks like that. So you ask, why is this low not where the B is? That's because at that point in time, the market had not satisfied the D extension. Does that make sense? Perfect. Deb, does that make sense? These are, and again, this is going to happen to you with the ABCDs. It's going to happen until you become intimately familiar with the ABCD rules. It just is, all right? So no need to sweat it. You've got the rules, right? Courtesy of yours truly. If you're not sure, all you have to do is reference it. We know the questions to ask, right? So we've got the rules here. I've got my AB boundary. What's my C? Based on the C, I know my D, right? The Fibonacci is giving me all that information. So the only question that you need to ask yourself with respect to your AB boundary and trying to determine where you are is, did it take out the A? Did it fulfill the D? If it didn't do either of those things, then that's your AB boundary. There's no ifs, ands, or buts about it. Make sense? It's gotta satisfy the D target that the Fibonacci, because the Fibonacci is a precise mathematical tool. It's a natural phenomenon. It's just how the market works, right? So the Fibonacci is telling you, based on this retracement, the expectation, the D target is here, right? This is based on how deep you're following the bouncing ball, right? It's physics. If this is FX Showtime, right, and I like to bounce a ball, And if I bounce the ball all the time with no variables off the floor, would it be fair for me to say that the ball should always return to the same area? If I can grab this, that'd be great. There we go. Right? If I bounce this every time, it's going to come to the same area. Same energy, it's going to come to the same area. If all of a sudden I bounce this ball into a hole, it's not going to be able to come back as high because it's expended more energy on the way down. Right? So I can't expect that the ball is going to bounce as high as it did before because it's spent more energy on the way down. If I were to bounce this off of a table, now it's going to go higher because it hasn't spent as much energy on the way down. That make sense? When you plot your Fibonacci, that's literally all you're tracking. The depth of the bounce, you're projecting where it's going to go. That's seriously what you're looking at. You're following the bouncing ball. Make sense? So your Fibonacci is giving you where it's going to go. The market has to, at the very least, hit that target. So if I bounce the ball, my ball comes down here to the 618, it needs to hit the 1.618 at least before I can plot my next AB boundary. Right? If the market manages to hit, based on what we talked about yesterday, right? If this is my AB boundary, the market comes down here, hits the 50618, goes to the 1.618, and continues. That's not my problem. From a strictly trading standpoint, if I got in here and I captured my profit, I got paid, so I don't really care what the market does after that. It's not my problem. I got paid. Right? It's as far as drawing my ABCDs are concerned, only after the market has given me a high, confirmed the entire swing, A, B, C, D, can I continue to draw my next AB boundary. If the market doesn't give me a high, I can't draw the next one. Does that make sense? Those are just the rules. Easiest thing to do is don't overcomplicate the rules. Follow the rules. Does that make sense? All right. So we go back to current, and the question was, why isn't one of these lows the B? Why is the B all the way down here? What about all these lows? Why'd you skip all these lows? They're not skipped. It's just based off the previous AB boundary. Here's the previous A. Here's the previous B. The market retraced here initially. Well, we had C, 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 C. This was the nearest point to the A after the B. Then the market gave a deeper C, almost taking out that capital A. This is an 8-6 retracement. So the projected D extension target at that point, what's the projected D of an 8-6 retracement? If the market touches green, it should go to green, right? It should go to the 1.18. So this was the 8-6 of that previous AB boundary, right? This was the 8-6 of that previous AB boundary. It hit the 8-6, almost took out the A, but didn't. The projected D target was down here, the 1.18. Do you see how none of these previous lows satisfy that? It's not until down here that the market scored the point, fulfilled the D extension, and then gave the low, 2 to the left, 2 to the right. All right? So here is the current AB boundary. And Anthony says, my current A is 115.494 and my B is at 111.126. Yeah, 111.12, that's a big difference. So more than likely what you're looking at is a situation where you did not start at the same point that I did. you've got the same A, but you don't have the same B, you didn't start at the origin of the trend. Right? Trend origin started over here. We had a few reversal points. Okay, so I'm going to clear this out, and I'll do this with you from scratch. I'm not going to go all the way to the beginning of the uptrend because we've proven that got taken out. But if we take a look at the downtrend movement, the recent downtrend movement, the highest high of the downtrend is over here. This point is higher than this point, and this is the lowest low so far that we have. So the trend line will look like this, out and across, out and across, and we've got an inner trend line that can go right here, and that's crap. Okay, trend lines. So if I start, there's a big consolidation period right here where it gets real nasty, but we'll do it here together. If I start from the origin, and I'm going to plot every single reversal as it occurs, but I'm going to move at a pace because I just realized that I'm well past the webinar end time. I apologize. Right? Start at the origin of the trend right here. The market starts to plot the down ABCDs. Whenever an AB boundary gets taken out, we're going to reverse, following the rules. Right? So this took out a down AB boundary. I have to plot in the up direction from the lowest low to the first high, up ABCDs from there. There it goes. Another AB boundary gets taken out. So I have to start from the highest high down to the first low, down ABCDs. Right? The market takes out a down AB boundary, reverse from the low, lowest low to the first high, right? Up AB boundary gets taken out, highest high, down to the first low. Down AB boundary gets taken out, reverse. Right? Up AB boundary gets taken out, reverse. Okay, down ABCDs, I believe this will take us all the way to current, if I'm not mistaken. Yep. Okay, so same price point, 115.51 roughly, 110.75 for B. As far as the sub ABCDs that we talked about, if I wanted to plot sub ABCDs here for the US dollar, Japanese yen, expecting the market to go in the direction of the bulls, it's broken the inner trend line, the US dollar index is postured for a rally, I'd have to start from the lowest low here. I've got a low price. It's going to be impossible to select with that circle there. This is a low price of 110.12, and this is a low price of 110.11. So this is going to be the lower of the two. Sub up ABCDs. This is my current sub up AB boundary. All right. Any questions on sub ABCDs before we wrap up? Actually, you know what? Let's go ahead. Let's save the questions. If you have the question, write it down. Right? Write it down. Ask me as soon as we get back from the break. We're going to take the short break, and we'll come back at 10:30 p.m. Eastern Time for the final discussion portion here of Analyst on Demand. All right, this has been Will Gomez, FX Showtime.